Welcome everyone, also from my side. I'm looking forward to discussing stablecoins again, but with another set of excellent people. And I'm sure we'll get a few new insights. So we will try to answer the question, is it now the golden age of stablecoins? Has it begun yet, or will it still begin, if ever? So I'm really looking forward to be discussing this with you. Maybe we do a quick round of introductions. I would like to ask each of you to just briefly introduce yourselves and your company. Clarisse, would you like to start?
Sure. Hello everyone, I'm Clarisse Hagege. I'm a co-CEO and co-founder of Dfns. We're a tech custody platform serving mostly banks, financial institutions and fintechs, and we've been securing over 15 billion euros since we started building Dfns.
Hello, my name is Michael Wild. I'm the chairman of the dEURO Association, which is speaking for the dEURO protocol, a fully decentralized stablecoin placed in Switzerland.
Hi everyone, Patrick Hansen, Director for EU Strategy and Policy at Circle. Circle is the largest regulated issuer of stablecoins out there, both on the US side for USDC and also here in Europe with our euro-denominated stablecoin EURC. I spent most of my time working on our European setup, European expansion over here.
Hello from my side, Joachim Schwerin, Principal Economist in the European Commission's part that is responsible for the real economy, DG GROW, in the unit on the digital transformation of industry. My remit is every type of blockchain, crypto, tokenization, application and policy development for the real economy. And I was also involved in drafting MiCAR and also the other financial things. I'm happy to discuss stablecoins now. As you said, everything has been said, but not by everyone. So let's have another discussion.
Thank you, everyone. So the subtitle of this panel is Life After MiCAR. But I was wondering, should it not rather be Life with MiCAR? Patrick, Circle has some experiences living with MiCAR, so to say. Maybe you want to share a bit about that, and maybe also thinking about the stablecoin markets in general. So the fight for market shares has definitely begun. Do you think MiCAR provides an opportunity for euro-denominated stablecoins, or do you think USD-denominated stablecoins will still be favored?
There was a lot in there. So a couple of things. I would say, first of all, MiCAR is a never-ending story, right? I don't know if you want to call it a never-ending love story, but it has at least been with us now for 4 or 5 years. I think the plans to regulate stablecoins were, the earliest here in Europe, around the world, and at least for us, I would say it was always seen as a net beneficial thing. And that's why, at Circle, we decided early on when we launched our Euro stablecoin in summer 2022 that we would onshore that under MiCAR and also, bring our entire stablecoin business over here. And so what we now do is we issue both EURC, the euro, and also USDC, the dollar, out of our regulated electronic money institution in France. And it has been a success story, at least for us. We're by far the largest MiCAR compliant issuer today. And we're seeing quite some traction. So to give you an example, our euro stablecoin, it has quadrupled since our MiCAR launch from a small base, admittedly. It was like 30 million last year, and now it's at like 130, 140 million. And we do think that it is related to MiCAR because all the institutions that are now looking into it, the PSPs that are looking into it, the exchanges that start listing it, that's partly thanks to the regulatory clarity we've enjoyed in the EU. Nonetheless, we might touch on some of potential shortcomings of MiCAR as well. I think empirically speaking, if you just look, you just open whatever CoinMarketCap, CoinGecko, or any other ranking of stablecoins by market cap, so far not many stablecoins have found their way into MiCAR. I think we're almost the only ones in the top 50 of stablecoins, and so there is the question of how attractive is the regime and the framework for the major stablecoins out there. And if it's not attractive enough, or we do see some challenges, some shortcomings, how do we address those? And I'm sure, we'll touch on some of these today.
Michael, would you also think about MiCAR as a never-ending love story? What's your experience? What's your relationship status with MiCAR?
I mean, some people you know, before my career in the DeFi space, I had been managing director for Binance DACH and also for eToro. On the other hand side, there was an auditor with KPMG. The point I would like to raise here, I think MiCAR gave us a framework we can operate in the crypto space. But when coming to DeFi, and I think Patrick just touched it, DeFi is not under the MiCAR regime defined. And this is, on one hand side, it's good. You can drive innovation. On the other hand side, for us, the protocol which launched, which I'm speaking for, we are orientating on MiCAR. But we have some uncertainty. So what will happen if the regulator, for example, BaFin, or in our case, FINMA, will come and say, hey, I mean, Switzerland is a little bit special. Hey, we have MiCAR and you're issuing a stablecoin. No, we do not issue a stablecoin. The protocol is completely on-chain. It's a code. And I think this is something, and I look into your direction, this is something it needs to be spoken about also with the regulators, with the think tanks, with the regulators. And for me, MiCAR is a good framework, but it has gaps, and we need to plug these holes.
Thank you. Now, turning to you, Clarisse, you're already taking over the microphone. Security and custody are also pretty crucial for issuing stablecoins. What do you think about MiCAR, and do you think it's influencing custody solutions for stablecoins?
With MiCAR coming into force, all the institutions that will be regulated under MiCAR will have to be DORA compliant, right? And so I think this is where we're converging into some sort of security and compliance framework as well, that is bringing some stability in the space. And we've been seeing over the past few months and few years, right, that we've been seeing players that have been operating without security standards, compliance standards, and putting at risk the end user money. So in my opinion, this is definitely a good thing. Now, when you look at DORA, there's obviously several levels, and still a lot of clarification that everyone is trying to find out. Right? For instance, as a tech custody provider, where we see potentially more volume coming into our platform, where we have more of a systematic risk, those tech custody providers will ever have to comply as well with DORA requirements, even though they are not under MiCAR regulations, right? So we've seen a lot of players that have been now looking for MiCAR registration, thinking differently about the way they were doing custody before, starting really thinking about their business continuity, disaster recovery program, what was the counterparty they're handling with. Okay, so actually custody of digital asset is not different than the word we were actually using before. So do we have a counterparty that has the right certifications in place? What type of controls do they have in place? And I think what's interesting is when you look at the DORA framework, there's also conversions with certifications such as ISO 27001 that are bringing some clarity. So overall, there's been quite of a stressful period, I think, from all the players. Excitement as well, because it's been a business enabler. It helped also clients to understand who's doing what, who's operating in the right way, and that's obviously a business enabler. And that continuity is absolutely essential if you want to start moving from proof of concept to actually production, if you want to start scaling. So overall, for us and for our clients, what has changed is that now we see compliance as a sort of North Star to actually also develop features. So we're compliance first as well in terms of technology providers. And what it means very concretely is that you need to enforce segregation of duties, right, when you're operating under DORA framework. So that has actually some consequences on the way we build our product. Who has access to what? What is the level of granularity that is acceptable? That's one, right? A second one that is important is about the location of the private keys. So MiCAR hasn't been so specific about these items. And I think it's been positive up until now because it's given everybody a lot of flexibility. It hasn't created any disruption in the way we're operating. But things are very different when you're actually being regulated in Abu Dhabi, in Singapore, in Japan, in Hong Kong, right? And so overall, once again, life after MiCA, I think on our side, it's been much more of a focus of how do we enable our clients, how do we bring that modularity that enables them to actually remain compliant not only in Europe, but in other jurisdictions as they grow.
If I may just follow up directly on that, because you said there's some flexibility which you feel with MiCA that you are enjoying. Can I say it like that? Like, are you enjoying that and are you taking advantage of that? Or would you actually like if there were stricter rules?
Our clients are enjoying it. I would say this is mostly what we see. When we have clients that are facing, for instance, Hong Kong Market Authority, and they have to have in their operations 98% of cold storage, 2% of hot storage at all time, this has heavy consequences on their operations. So on our side, it would be very, if we had a guidance that were more specific, it could be a competitive advantage for us, right? So there could be a business opportunity there. But it would be also a big struggle for our clients. And I think it would be overall not favorable for business. So there are some areas in which we interpret what MiCA is saying, not only on what is self-custodial, what you can do around self-hosted wallets, where we see that there's been some flexibility here that a lot of our clients have been enjoying. But no, overall, I think this is mostly positive for the industry.
Okay, thank you. Talking about custody, I often have to think a lot about consumer protection. And Joachim, Brussels is known for being at the forefront of consumer protection. Do you think this is something that will also favor this regulation? Do you think it's beneficial of the MiCA regulation? And other legislations might copy that? Or do you think it might even be a bit too strong and make it too strict for companies?
I think that consumer protection is completely exaggerated. And when we designed MiCA, I can only speak for the colleagues that designed MiCA. We, of course, have, let's say, minimum requirements, but I don't see a liberal regulation like MiCA that is underneath MiFID, that is there basically to empower utility tokens and also give clear rules for stablecoins that, of course, can be discussed in many details, but not regulate anything else in the crypto space. We heard of DeFi, but also other things, DAOs, NFTs, etc. These are all highly innovative areas where the normal case is that you invest money, where you bear the risk and you know that. So, of course, there are certain rules necessary. But if you look at what has developed in the level 2 standards, for example, on reverse solicitation or other things, that is completely against the spirit of MiCA and is certainly not the intention to be there. We are not there to protect every stupid person that doesn't know what to do with the money. And I, of course, understand that there is a tendency to come from the institutional investors, from the established ones, that discover crypto as a sort of side issue to their standard business, that they want to have very similar rules, but that, again, is a misconception of MiCA. MiCA is not an extension of TradFi. MiCA is the second step after the General Data Protection Regulation of having a bottom-up regulation where we put ownership in different hands. And therefore, I would say that from my perspective, consumer protection is probably the last thing that I want to discuss about. I would probably rather think about the enabling potential of writing certain things on paper and having it done on the market for a certain while. We are far away from thinking that all of this is perfect. We are very attentive to listening to the market and have a lot of meetings. We recently, 2 weeks ago, I organized a workshop in Brussels on the relation between MiCA and DEURO with the industry stakeholders. We have tons of open questions. We ourselves have tons of open questions, so it's a huge learning experience. And I think we should take the time to let that sink in, but keep as the benchmark that crypto is a different paradigm compared to, let's say, traditional finance, where other topics might be in the forefront, and we want to preserve and support this, I would call it, anarchic, innovative edge that you have in crypto, which should not be corrupted by traditional thinking?
Thank you. I'd be very keen on Patrick's and Michael's opinion on that. Do you feel like you're being heard in Brussels? And do you feel like those, or like your innovative ideas are being supported? Or do you sometimes have a bit of a critical view on that?
I think that train has, has left, unfortunately, already. MiCAR, at the end of the day, in its current form, was adopted 2.5 years ago. And Brussels, at that point, kind of was done. So what happened in the last 2 years was EBA and ESMA took over and started, issuing those level 2 standards and guidance. And I think they did, to some extent, consult the industry. They also always published, public consultations on those topics. And those were quite helpful and quite useful. I think overall, one challenge is it's just the MiCAR text in and of itself is manageable. It's like 160 pages roughly. But if then you start digging into the level 2 standards that were published and you're a CASP, say, you start facing thousands of pages you have to comply with. And it starts to become probably a barrier to entry to the smallest player. Circle is lucky to be, at this point, quite a large company with the necessary resources to go through these compliance costs. But for smaller startups, the barrier is way higher than it was a year ago. And so I think in Europe, we need to make sure 2 things. One is that we continue to enable bottom-up innovation from developers, from coders, from people like students here that want to dig into crypto and blockchain technologies, and we don't straight away give them a baggage of compliance and legal costs that are hardly surmountable for them. That's number one. And then the second challenge, and I think that's one that will be increasingly important, is how do we make sure that whatever we decided here in Europe in terms of rules of the road is actually compatible and interoperable with the rest of the world, right? Because at the end of the day, crypto assets, stablecoins, those are global assets. They only make sense from a global perspective. That's why they're globally liquid, accessible, usable. And if suddenly we kind of try to balkanize, the crypto asset space by saying whatever you do in Europe over here has to be, completely, shielded from the rest of the world and isn't easily integratable to services around the world, that would be a massive, I would say, damage to the European crypto industry. So overall, cautiously optimistic, but I think these are 2 major factors to take into account when it comes to reviewing MiCAR these next couple of years, and where the Commission, in my opinion, should be in the driving seat, because it was, from the early days, the goal of the Commission to create a thriving and bottom-up startup ecosystem around crypto.
Michael, you were nodding all along. Would you agree to that?
Mostly I cover Patrick's opinion, but I need to tackle it from different angles. As you know, I had been involved over here in Germany when overtaking Binance as head of Germany, and then becoming Austria and Switzerland also responsible. The big players had massive funds invested into governmental relations to try to shape MiCAR in the best way so that they can enter the market. And I mean, it's an open secret also. Binance was involved and tried to revitalize the relationship to the regulator at that time. I think it was a little bit of pity that the market went down due to the DFX fraud. That had massive impact on, for my opinion, perhaps Joachim will disagree, but for my opinion, on MiCAR. So we got stricter rules than expected. But on the other hand side, when coming now to the DeFi space, where we are moving, we are a small company. So we started half a year ago. We are fork of Frankencoin, the biggest Swiss stablecoin, which only has around 10 million volume, because Switzerland is a small country. And we released dEURO yesterday into market. At the moment, we have 2.5 million volume. And the problem is, when we were talking about DeFi, And talking about working groups, talking to regulators, I think there's a lot of uncertainty, I would say, with the regulators, because there's a lot of discussion. I discussed it in the morning with Christoph Kreiterling, who was ex-BaFin. And what is DeFi? How do you define DeFi? It needs to be completely independent. You do not have a liability person. You do not have an entity you can make liable. And the problem is the most companies in DeFi space, so this is what Patrick tackled, are small companies. And these companies are not sitting on a table. And I'm a little bit skeptical if there will be MiCAR 2.0 or there would be an extension to MiCAR also covering DeFi, if you will have the right regulatory framework. Because it needs to be defined, what is DeFi, how do you want to regulate it? Because if you want to regulate DeFi, I need to regulate you, Lena, because you are the customer acting with the code.
Can I ask a question?
Of course.
You're not afraid that if you start regulating DeFi, it becomes CeFi?
That's precisely what it is, yes.
Excuse me?
That's
Sorry?
precisely what it is, yes, exactly. That's the reason why it's not regulated. Yeah.
Sorry, I was slightly distracted there. Do you think we should still do it? Like, should we try to define DeFi and then should we regulate it, or should we just keep our hands off of it?
It should be a clear definition. What is, from a regulator perspective, what is decentralized finance? Because when you, as a young company, I mean, I'm coming from traditional finance. I was working for Commerzbank. I was working for Credit Suisse, also in the risk and compliance departments. You need to tell the innovative and young players, what is it? How do you need to set up the code and possibly also the supporting organization to stay on the DeFi path and not to slip over into the centralized path? I think it would be good if there's at least a recommendation or some core principles like BCBS did in the past for risk things the industry can orientate on.
Yes, I wanted to come back to that, but where I agree with you is that almost even from a technological standpoint, I think if you don't want to put guidance, because once again the risk is that it becomes CeFi and then you're under MiCAR, but at least from a technological standpoint, I think pretty much DeFi is operating on smart contracts, so we need to have kind of some norms or some audits or some frameworks around the way you actually should audit a smart contract, some companies that start being certified, some technology that is actually certified. And I think, to me, regulated DeFi has to be at the technological level. It's giving guidance, the most precise guidance possible, to make sure that there's visibility for consumers, right, to protect consumers. There's visibility for consumers when actually interacting with DeFi, and when they actually plug their wallets to any dApp, they understand, all right, this player has done the effort to actually give some clarity to me as a user, right? And I think if we start doing that, this is already such a big step that will enable you to, attract many more users without touching, once again, at the kind of core regulation of MiCAR.
Possibly. If I can add, this is exactly what DeFi is for me. DeFi is very transparent, right? And what would block the regulator to say, hey, at least you need to transparently show how much funds you have an audit on your funds, have an audit of the code. We do it by voluntarily on the webpage, so we upload the documents at the moment. And in the morning we also discussed there could be also a possibility to embed regulation in the code, that might be a necessity. And I tell you, from one angle, I totally agree, it would make sense, because a little bit in DeFi, if, for example, a sanctioned country will come and will use the protocol I'm speaking for to transfer funds, you cannot stop the code. There needs to be at least some kind of control mechanism. The most people in DeFi space will hate me now, but it should be a possibility to block unwanted customers.
If I just may, I'm sorry, I'm fascinated by this discourse. From our perspective, I must say it will not happen. And I also think that we have a number of reasons for that. I mean, given the proviso, of course, that our political leaders in their wisdom decide what they want. So if they tell us to do a MiCAR 2.0, especially on DeFi. We will, of course, do it. And I think that we have also, and that's not only myself, but my esteemed colleagues made clear that we take the Casablanca approach, for those that have seen the movie. So basically, we will arrest the usual suspects, those that can't move fast enough, but it will not be on DeFi. I mean, if you take DeFi seriously, this is about disintermediation. We have already made a far shot with MiCAR, because crypto assets are by far the smallest market that are regulated under traditional financial regulation. That is not self-evident. Now to go for DeFi, which is even much smaller, which is much more diverse, which is much more innovative, in our opinion, first of all, requires to ask a number of very serious questions, of which we have heard a number of things. Indeed, what is really decentralized? In our opinion, nothing is fully decentralized, at least not all the time, so that would require some standards, which is a difficult area to get to. In blockchain, we have at least 5 different layers that we use in our systems. In my personal opinion, at least 2 of them will never be sufficiently decentralized, at least not now. It's basically the same with AI in a specific way. So it would have to be very, very detailed rules, which would, in my opinion, be quite counterproductive in terms of innovation. It would also require ring-fencing DeFi against things like DAOs. I'm working on DAOs on a legal wrapper in Europe that includes, in my opinion, things like collective liability. And the baseline of that, if you think of bottom-up technology, you only disclose anything that even includes your identity, your funds, whatever you do, if you scale to that extent that you enter a market which is already regulated, and then you have to do that. But before that, you are in a sort of virtual chat room or doing your thing. No one has any right, in our opinion, to know anything about you. And I don't care about sanctions and all that stuff. This is a fundamental human right, like privacy, where you can do whatever you want if you agree on a value system, and only if you enter a regulated market, you have to be regulated. So we are fully opposed to any ex-ante approach of defining everything and then giving it to the European and national regulators to come with another 10,000 pages of that. Let's take the one example where we have a little bit, like the Danish NCA's guidance paper last year on DeFi. I dislike that for many reasons, but I must say that this is, of course, a very valuable contribution, because what the Danes say, building on their experience from their sandbox and a lot of companies, for the first time is we ask you basically 3 serious questions about your technical infrastructure, your governance, and basically the essentiality of what you do. And if we don't find a problem in these 3 areas, we stop asking questions and go ahead and good luck. This is the first document from a regulator that I see that is reasonable in terms of structure, and then at a certain moment says that when we don't see any problems in the first 3 questions, we stop asking questions. I'd love to see that more. And this is a sort of changed spirit in this space that we need to install more. But in my opinion, and I fully respect that, I think we can work with guidance, we need to educate, we need to see of how transparent also with smart contracts. I mean, when you give smart contracts to politicians, we have very weird ideas. There are politicians coming to us that you say, you need 1 smart contract for every country and we regulate it and things like that. I mean, certainly doesn't really recognize the nature of these things. So I'd be happy to take a soft approach to do that more. But the moment that you put DeFi in any traditional financial regulation, it is not DeFi.
It's a fascinating place to be in, like a DeFi protocol calling for regulation and
for the definition.
Okay, and the EU Commission opposing regulation. So I didn't have this on my bingo
I
card.
take your statement when the regulator will come, and they will reflect it to you. The boomerang will come back to the Commission.
I know that, but we have power to deal with that. But
no, I mean I largely agree with Joachim on this. I think it's so complex, it's so technical. There is no market failure today that any kind of formal criteria on what constitutes DeFi would, in my opinion at least, necessarily create more harm than good at this stage. I think it needs to be a case-by-case assessment. Otherwise, I just don't think it will work in practice. And I think we have enough, right now to work on with respect to MiCAR 1.0. There is so many open questions. There's still standards that haven't been adopted. Like, just to give you one example that touches stablecoins, the level 2 regulatory technical standard as to what constitutes a high-quality liquid assets under MiCAR for EMT issuers and ART issuers has not been published yet. And so at this stage, we're still, dependent on drafts, on conversations. And so I would advocate for let's focus on what we have built like for like 3 or 4 years now, MiCAR, the framework. Let's make it work, right, in terms of crypto asset services and stablecoin. Let's make it competitive. Like the European industry as of today doesn't have competitive businesses that are globally visible and competitive with the major institutions out there. So let's make it work first, and then let's see whether in the future there are market failures in DeFi, and if so, we'll think about how to address it. But at this point, I tend to agree with the Commission, and I don't think a kill switch would be a good idea at this.
And do you think the MiCAR is an enhancer for creating more competitiveness in the EU, or like actually global competitiveness of the EU?
I think it's too early to say. The market will tell, and it's only the market that will tell. It's not like talking. It's not like being here at conferences and speaking about what you build and what you plan. At the end of the day, it's numbers. We'll have to wait and see. In 3 years from now, we may sit here, and then we'll see what the volumes are in MiCAR, for example, for trading platforms, if there are even like remotely comparable to the liquidity we see on Asian or US exchanges. Today there aren't. Maybe there will be, we'll see, and that will depend also on a pragmatic approach by regulators. Same for euro stablecoins. We're putting a lot of resources behind our URC stablecoin. Let's see if it works. I think we'll hopefully see also some change in posture towards stablecoins here in the European Union. But at the end of the day, I think the industry will do everything it has and everything it can, but ultimately it's also up to the public sector and try to enable it. And then I guess, we'll check back in 2 or 3 years.
So it is up to the public sector, but I wonder if you compare what's currently happening in the US, where the public sector with bill drafts is really pushing for it, and I wonder, maybe a question to all, not only to you, Patrick, if the EU can really catch up with that, because currently the market share of euro-denominated stablecoins is really tiny.
I don't think we're behind yet. so in my opinion, yes, when you look at the volume of USD stablecoin or USDC against EURC, of course, there's a big discrepancy. But to me, it's less of it's today, it's still not a matter of a regulation that is too strict, because for the longest time, regulation was better than anything. We've been moving to the United States 2.5 years ago, right before FTX collapsed. I must tell you that we gained much more business in Europe than in the US. So the US has been absolutely dead. To me, to come back to, will the EURC, have a 10x or 100x or 1000x in terms of TVL, we come back to the use case, right? So it's about what do we enable with the euro stablecoin, right? And it's very possible that as long as stablecoin are mostly used for, once again, off-ramping DeFi, USDC is going to be used by most of the players, right? Because there's not much use into leveraging EURC, in my opinion, for that specific use case. So it goes back to the use case, and maybe one detail about MiCAR and an element in the regulation that may be an issue into developing more euro-based stablecoin that I'm pretty sure the US will not implement is once again the fact that you don't have any yield-bearing stablecoin. And that is, to me, the number one potential retail use case for euro, and the number one potential way for actually a euro stablecoin to increase, right, and to grow faster, because at the end of the day, most of cross-border transactions are made with a USD leg and not a euro leg.
Would you agree to that, Michael? Do you also think the race is still on?
It's historical. The dollar is the leading currency in the world, right? And when crypto came up with stablecoins, dollar was the number one choice. And when you look to the US, I'm not so deep in the regulation over there, but from what I understand, the regulation landscape was very fragmented, and SEC was not very pro crypto and stablecoins. But now with the new president, America First is doing everything to keep the dollar the leading currency, and this is exactly what is happening. And from my point of view, in Europe, I mean, we have 27 member states, and we are discussing, and it starts also with MiCAR. BaFin is handling MiCAR stricter than, for example, other regulators. And I mean, I think we have other problems, what we need to tackle first. And yes, there is potential for euro stablecoin or euro stablecoins. There is big demand, but it will not replace the US dollar stablecoins.
I think the major opportunity here, at least also like speaking to many folks here at the conference, and is really the first mover effect in terms of institutionalization. I think that's something, you know, when I speak to colleagues in the US or elsewhere, where I think other regions are still lagging. So in terms of, you know, asset managers that start thinking about tokenizing financial instruments when it comes to tokenized capital markets, when it comes to payments use cases using regulated stablecoins, all of these more institutional volumes that could come on chain here in Europe, I would say there we have at least a couple of years still of a head start. But that's, you know, the next 12 to 24 months will be really key here, because at the end of those 24 months, all the other like jurisdictions in the US, also in Asia, you know, Hong Kong and elsewhere, major financial jurisdictions will have come online at this stage. So it's really up to us now in terms of major banks, major asset managers, major payment service providers, just to embrace that technology, because at the end of the day, that's what the regulation has been created for. Regulation wasn't created for regulation's sake, right? We wanted to build a business and an industry here, and I hope we can. And by the way, my comment wasn't like referring to stablecoins only on like our competitiveness, even CASPs. Like if you look at custodians, for example, US custodians, crypto custodians have hundreds of billions of assets under management and under custody. The largest European custodian is like a drop in the ocean compared to that. Same for derivatives exchanges, spot exchanges, etc. So a lot of catch up to do, but let's leverage that first mover advantage.
Okay, we do need to wrap up soon. Joachim, do you have another point on that, or can I ask you one final new question?
Ask a final question, because most things have been said, and indeed I could talk a lot about the dollar or not, which is very much in decline actually, where we see the stablecoin approach in the US as a last-ditch attempt to again increase the global uptake of a dollar. You shouldn't forget that the role of the dollar as the reserve currency has gone down from more than 80% to now 57%, and much further declining in a multipolar world. If you bring up stablecoins for the unbanked around the globe, where basically you have it one-to-one tapped to the US dollar and bring all of that in, you have a massive volume, and they see it from a strategic perspective of trying to get rid from their massive debt problem, which at a certain moment will kill them. So if we develop a strategic vision on that comes from the demand side, I think there's a lot of potential, but it finally requires that politicians get the act together and do that.
We only have 2.5 minutes left, but we haven't really answered the magic question. Are we in the golden age of stablecoins, Joachim?
No, we are not. And look, as an economist, I must say economics is very simple. And we talk a lot about the supply side of what we supply in terms of technology and solutions. If you look at the demand side, everyone I speak to in industry, in startups, normal consumers, just want workable digital solutions. It can be anything. And we know that if you have a complete spectrum from crypto to CBDCs, we haven't talked about private commercial money, all those things that have basically a non-digital and a digital version. And whoever gets the act together first has a moving advantage, but also we have a disparity of use, so there will be not the one big solution that will kick in. I'd love to see stablecoins much more developed, and I wish everyone here luck, but from my perspective of coming from the real economy, where I think the bee flies, we should also talk about not only e-money and, let's say, these straightforward solutions, but stablecoins are basically products that can be combined with a type of reserves of anything, real-world assets, commodities, things like that. Anything can by now be tokenized, and that is a very interesting way in the future. So I think the moment that you can tap that potential, you have much more leverage than you have now. It's certainly that stablecoins are on the up at the moment, but to call it a golden age just because finally a few of them are to compete on global market is a misnomer.
Patrick, 15 seconds to tell me if we are in the golden age of stablecoins.
Yes, we are.
Perfect. I like concise answers. Michael, what do you think?
I think we are at the beginning, as Joachim said. We need to create more USPs on real-life use cases for stablecoins, and this is what we try with dEURO. not offering a stablecoin, also offering the user direct minting loans and providing savings, all via a decentralized protocol. And I hope others will follow.
And Clarisse, how golden do you think it is?
I think it took 15 years for stablecoin to become famous overnight, right? But it's very much just the discovery. It's the beginning of what we're going to see.
Perfect. Thank you very much. Right on time. Thank you for the interesting panel.